Hi, Beaux here, Beaux Knows Insurance and Read Insurance, here today to talk to you about a recession. There's lots of questions going on in your mind maybe right now about recession. What is a recession? Are we in a recession? What's going to be the effects to me of a recession? Another question that you may not have thought of is maybe what causes a recession, or also how is this going to affect my insurance? Well, stay tuned. I'm going to talk about all these different things inside of this video and maybe help you to understand, and understand what to expect. And then maybe also what are some things you can do to help soften the blow to you in the event that we do go into a recession. So let's first talk about what is a recession. So a recession technically is whenever the nation's GDP or gross products has reduced for 2 quarters. That's 6 months total. A lot of different news outlets will report whatever the job loss numbers are, the unemployment numbers, the gross product numbers, all these different things. They will put those things out. They also will report about how well did Apple do, how well did Microsoft do, how well did Amazon or Google, all these really large corporations. They want to know how did they do over the last quarter? How were their expectations, their expenses versus their profits? And all the reasons that they do these things is not to gloat about these really large companies, but these are such large companies, they all have such a massive impact on our economy. Recession is basically whenever things are out of whack in the sense of the economy. Jobs, sometimes we'll be losing jobs, sometimes we'll be expenses will get out of hand. There's lots of different things, but here are some different indicators just to kind of help you to understand. Well, one of those indicators is people are losing their jobs. People are losing their jobs not just because companies are greedy or whatever else, but because expectations are not that great. If companies are expecting expenses to be higher than their revenue, or that their sales are going to be lower, or that it's going to cost more to produce the same amount of results in sales, they may do things such as lay people off. The whole reason that they're doing this is to make sure that they stay open for a long period of time so they can continue to stay as an active business. What are some other things? Well, inflation. Inflation is another one of those things. We've seen over the last year, we've seen the cost of a lot of things increase dramatically. Inflation is one of those things that could be an indicator of a recession coming. Another thing would be actually deflation. All of a sudden things are not worth nearly as much as they used to be. Well, why would that be? That seems almost counterintuitive. Well, if there's going to be less money to be spent on different things, well, it's the whole thing of the law of demand. If demand drops, well, the cost of things are probably going to drop too, because there's not going to be money there, and companies got to figure out some way to still move those products that they've already produced. But what are some other things? Well, as I already said about the jobless numbers, jobless numbers are increasing, or people applying for unemployment. Those are different things that are indicators. What can be some of the causes of that? Well, one of them is just maybe some sort of turbulent, event. Maybe, for instance, we went through the COVID pandemic, 2 years ago, that it was pretty devastating on a lot of countries' economies. That's one of those things that can have a massive effect on the economy and lead us into a recession. Well, overspending, spending just lots and lots of money that maybe we don't have, maybe that we borrowed as a government. That can lead into a recession. We don't live by a gold standard with our money. Our money is not based off of a gold standard, it's based off of the value of our government. Whenever we pump in a lot of cash, well, it will help create a short-term help to our people, but also it's going to provide a long-term problem because we've got an increased amount of debt with maybe not a very good outlook of being able to pay that debt off. Some other things are the effects of recession are, I mentioned some of those that are also indicators. Some of those indicators are also some of the effects. One of them is extreme inflation. All of a sudden everything becomes extremely expensive. Sometimes the prices of things really fall, but unfortunately, when the price of things fall, unfortunately, cash also falls. The amount of cash readily available also a lot of times will fall in conjunction with it. which will kind of make it feel like still everything is overly priced. Some other things that you can do, maybe some things that you can do if you think about it is, one of them is save. You can save money while you're, make sure that you're living below your means or at your means and saving at a reasonable amount of money. Back in the Old Testament, Joseph was called on by the Lord to save the country of Egypt, which was also housing the Israelites, and he took a third of all of the grain that they brought in for a period of time to save that. So whenever times got really bad, then they would have that as a cushion. Now, I'm not telling you got to save 30%, but do save something. That way, whenever times do get tougher, you've already got a plan in place that you can live by. You know that you're living at or below your means, and then you have this cushion of cash that you can use during the short-term downturn, because it's probably not going to last very long if we do go into a technical recession. Some other things you can do is just be wise about how you spend your money, and then also just be aware. Be aware. Watch the things that are going on. Maybe you can pick up a second job if that's something that you need to do. If maybe you've got too much debt now. Also you can think about maybe eating out less or other things like that. Just be wise about the money that you're spending. Now, these are all different things that have an effect on you, but I haven't really talked yet about the effects on insurance. So let me talk a little bit about that, because it can affect your insurance as well. I've already talked about inflation. Well, inflation will eventually trickle down to your insurance. Well, how is that though? Well, it's very simple. Insurance is in place to take care of fixing physical things that you have that have been damaged somehow. Damaged in a claim, whether it's a house and a tree has fallen on it, or it's caught fire, or a vehicle has been in an accident. All these different things are physical things that we own and we buy insurance for, so that if something happens to it, we have a pool of money to pull from to pay for that, right? Well, whenever supply chains have become restrictive because of recession or economic downturns like what we had in 2000, whenever COVID began, those all trickled down eventually, so that whenever we have to put our car in the shop because either a repair needs to be done or damages need to be fixed, well, it's going to cause delays. It's also going to cause, because of the law of supply and demand, the cost of goods are going to increase. That's going to trickle down eventually to your insurance policy. It's going to cost more to fix your car this year than it did 3 years ago because of inflation. So because of that, that's going to cut into the margins that the insurance companies have planned on to help take care of claims. Remember, I've got another video where I talk about, where does your money go whenever you pay your insurance premium. And if you remember in that video, it's anywhere from 5 to 10%, depending on home or auto insurance, that is the cushion or the amount of profit that insurance companies have to base off, to live off of, basically. If the cost of repairs are going up exponentially, 5, 10, 20, 30%, that's going to cut into those margins. Well, what can they do? Well, I'm going to get a little nerded out here for just a second and help you to understand how do insurance companies make money. Well, they make money really in two different ways. One of them is by collecting premiums, paying claims, administrative costs, and all that. What the difference in that is called profit. The difference between how much money they take in and how much money they pay out for either claims, administrative costs, and whatever else, advertising, etc. That is called profit. Well, that's how they make money. Well, another thing that insurance companies do is that they will use some of their cash to invest into the stock market or make investments so they can also get the returns from there. Well, you may say, well, that sounds a little bit like gambling. Well, it's not really. What really is a gamble is me saying, okay, well, I'm going to take in $100. I expect to spend $90 on claims and $5 on administrative costs. That's a little bit of a gamble. Yes, it's a bit of a safe gamble, but it's all based off of knowledge from the last several years. And then also maybe expectations based off of trends. So what they've done is, in the stock market, they have looked back over the last 10, 20, 30 years to see, okay, if we invest in some of the top largest companies, what kind of return can we expect? Well, that number is almost 15%. That's a lot more. Remember I said about 5 to 10% on the insurance product? Well, they're able to make a safe assumption that they can probably get about 15% return on the cash that they invest into the stock market. Now, they don't bet on that. They may take a number lower, like maybe 8% or 10% maybe, and we'll say, okay, we expect that we'll be able to get this much return. They put that into their calculations on their budgets and then set their rates based off of that. If they do better, great. Then they have a really good year. If they do worse, well, they should have some degree of buffer there so that it should be okay. So they take those two different things into play to help make sure that they're, staying active and staying alive as an insurance company. Well, the last couple of years, as you have seen, the stock market has not really done very well. So that has taken away that cash reserve or that additional revenue insurance companies have been able to make. So that, on top of the increased costs of expenses to build houses, to replace roofs, to fix vehicles, all these different things has caused those profit margins to be reduced. So the only other alternative insurance companies have is to increase rates. Now you're saying, oh, wait a minute, Beaux. Did you just tell me insurance companies are about to raise my rates? Yes, unfortunately. Nationally, we are going to see insurance companies raise rates because they're going to just have to. In order for them to be able to stay alive as an insurance company, for them to stay alive as a business, for them not to go under financially, to go insolvent, they're going to have to do that. What that means whenever they become insolvent just means they spend more money than they take in. You can't do that. You literally can't do that. The government gets away with that, but people and businesses can't do that because you become insolvent. The government will shut you down. You may become bankrupt. People may file bankruptcy, may reorganize or something like that, but you just can't do that. So insurance companies are going to have to raise the rates because of inflation, potential recession, and then also because of the downturn in the stock market. So these are all different things that are unfortunately going to trickle down to us as consumers. Hey, I'm a consumer just like you are. I buy insurance for my house, my cars, life insurance, all these different things. I buy it just like you do, and my rates are going to go up too, unfortunately. But I'm not trying to scare you or anything like that with with this video. I'm just trying to help you to understand. I think it's best to know and potentially what may be coming, so that you understand the economy of insurance and how it's going to be affected by a potential recession. So ways that you can potentially recession-proof your life. Well, there's no way to really recession-proof your life, but remember I gave you some tips earlier. One is, live below your means. Be smart about how you spend your money. On your insurance, apply insurance premiums to the right things. It's a safer bet to buy higher liability limits, because if you get sued, those are going to be the really large claims. If you have an accident, that's going to be the really large claims. Where should you save money? You should save money on your deductibles. Take higher deductibles. It'll help save you money, and it's a much bigger bang for the buck, so to speak. You can go from a $500 deductible to a $1,000 deductible, save that money, put that money in your pocket, because you're probably not going to have a claim this year anyway, but you could save that money over the next few years. If you have a claim, hey, fine, you got that money now. If you do wind up having a claim, okay, well, you had a claim. You're still talking about a difference between $1,000 and $500, which is only $500, and surely you can afford that. So I hope this video has helped you. I hope this hasn't scared you. I had no intention of trying to scare you, but be aware that we are really in uncertain times, and there are different things that are going on in our economy that are going to affect our insurance premium, as well as also just us generally as well. So hope this video has helped you out. If this video helped you out in any way, or if there's any other videos that you want me to record, hey, let me know. Put them in the comments section. I'd be glad to record a video for you. If you like this video and these help you out, hey, hit that thumbs up button for me, please. This helps other people just like you to find these videos that can help them to make more informed and better decisions about their insurance. Hey, if your insurance agent is not having these sort of conversations with you, then maybe it's time you find yourself a new insurance agent. Thanks again. I hope you have a great day.